Hello friends and welcome back to IG on Wall Street, where I'm very pleased to welcome back the one, the only Rick Bensignor, who is a true legend on Wall Street. Not only is he the former Chief Market Strategist at Morgan Stanley, but also the first to teach behavioral finance theory at NYU, and also writes one of the most followed newsletters, global and macro as well, for the investment community. Rick, thank you so much for joining us.
Thanks for having me, Ange. Always a pleasure.
I mean, like, on top of all this as well, of course, you are the author of In the Know Trader. Tell us, what is the most recent thing you've been writing about?
So, look, I started In the Know Trader, I think it was 2018, to give retail investors access to some pretty sophisticated Wall Street models that they would not normally have access to. So that's a newsletter. I have two. One's a daily tip sheet. So for active traders, we have something that comes out every day. Reviews not only what happened, but what's coming, upcoming earnings, etc. Probably about 3 times a week, I put out new trading recommendations, and those are trading oriented, so they're meant to generally be fairly short term. That comes out daily, and then on once a week, generally Thursdays, I have my weekly tactical trader report. That's a little more macro, has a little longer term time frame too, and reviews a whole bunch of different global markets before getting into recommendations on what to do this week, as well as I follow every open idea I have until it gets closed out. So what did we most recently talk about? We talk about the fact that for U.S. 10-year interest rates, the 4% to 4.2% trading range that had been around 3 or 4 months broke out to the upside a couple of weeks ago. I had an initial target of 4.32%. We got to 4.31 on the high last week, pulled back to 4.2% this week, and we're a little above there now. So it's kind of important that it generally stays above 4.2% for the breakout to be real. In that particular pattern was not only breaking a sideways multi-month pattern, but there's also an inverted head and shoulders pattern if you look at it in yield terms, so looking at the TNX. And that measures to about 4.4% because you had roughly a 20 basis point range that you were trading in. So I'm giving some breathing room down to about 4.14 in case it pulls back under 4.2, but it shouldn't pull back much under 4.2 if it's a real upside breakout in rates, which of course completely opposite what the whole street's been betting on for months and months and months, if not a year or two, and rates really haven't broken down the way certainly President Trump would like them to. The short end, the Fed controls, they're doing their part on that, but the longer end is holding up, so yield curves have widened. And so that's one of the big themes. The dollar weakness, I think the dollar index is heading for 95 or lower ultimately. So I still see that as kind of an overall type play, although this week it got a marked downside exhaustion signal. I think it was the weekly chart got a 13 signal, so it's much tougher to first be a seller of the dollar now. The risk reward's not the same as selling on a rally. You're selling weakness into a prescribed potential downside exhaustion point. So that's going to be a little tougher to play going forward. The metals market are flying. I've personally reduced about 30% of the silver I own and 25% or so of gold and GDX because we're in a parabolic move. It can.
Exactly, and we saw this last Friday when silver crossed $100. I mean, is the best way forward for those of us already with positions in silver to kind of like almost edge ourselves out of this and take it in legs out rather than one big full swoop?
Yes, because you're never going to get the right day and time to sell your whole position out. I'm playing this game 45 years. And some of the silver I've sold, the SLV I sold in the last sell I had was, I just sold some at 102. It's already well above that. But I sold some, the prior sale was at 78. So the thing, but these are little drabs because I've seen this game before. And I'm long silver in the 20s. So I don't mind taking profits in the 60s and 70s and low hundreds. And I still have the bulk of my silver. I still have the bulk of gold. It was interesting. I was talking to a woman in the industry yesterday who's in the gold, mostly on the gold side. And she said, I said, how far is this going to go? And she said to me, she thinks gold's going to 10,000 and silver's going to $200. Um, I have no idea how, why. The incremental buyer now is supposedly China in gold. I don't know who else is buying up here. The public certainly isn't. Um,
I mean, I'm of the mind, and this is not trading advice; it's just my own view that silver has risen so far so quickly that I am taking some off the table there, but then remaining long in gold prices, because as we've seen, Rick, in this space before, when silver does decide to dive, it does it big style, right?
Absolutely. Out of all the markets that I've traded, the commodities markets I've traded in my career, which is almost all of them, certainly US based ones, I'm not sure there's a market that falls faster and sharper than silver when they let the air out or when they pop the balloon. Uh, that thing just falls on air. So I used to be a pit trader in silver. I know it well. I know COMEX gold well. Um, so you do drips and drabs because there's no way you're going to be able to figure it out. And if all of a sudden one day you wake up and silver's down $20 an ounce and you haven't sold anything, you're going to be kicking yourself in your rear end. And it's going to ruin your day, and it's going to, it's going to throw off everything. I don't mind that I sold some SLV in the 60s and 70s because I'm long in the 20s. They're
Yeah, because you
already,
got in
it
early.
took a long, it did take a long time for these long-term investments to work, over 10 years. Um, so they weren't great long-term investments. They would have been much better if, in 2025, I first went long and had used that other money and not tied it up for years. But I always believed in metals, not only as a hedge, but having been a floor trader in those pits, I kind of felt like, I had a good sense of what these markets are, what they represent, who the buyers are. And, in this case, it was really just timing. Um,
Rick, I'm sure our viewers and investors watching this are really curious because I love the atmosphere, as you know, in the pit. Last one I've been in recently was in SIBO. Give us the sort of insight into the action, and when when it's going to be a wild day or when when it's going to be a red day.
You do. I can tell you this. It was always said that the people on the floor had the greatest insight into what was going on. And I'll tell you a story about that I think your listeners will appreciate. It's a story I've told before when I've been in, let's say, keynote speaker at conferences, because what I'm going to tell you is and was the life of a pit trader. So some days are great. Some days, no matter what you do, you're just out of sync with the market. Every time you buy, it goes down. Every time you sell, it goes up. Just some days you're off the same way. The best basketball player in the world can just have a bad day. But this is a true story back from October of 1990. I'm trading stock index futures in the pit in New York, trading near composite index futures, the secondary market to what the S&Ps were. And I'm a local. I'm standing on the second step right behind the brokers. And, broker goes, where's the market? And I go quarter bid at 30 for whatever handle we were trading at the time. And he told me 10 at a quarter. And there's this uproar of noise. And before I've even carted my trade, before I've even written, I've, bought 10, the price, and who I bought them from. I hear at the limit, at the limit. The market sold off on some news that I'm just making a two-sided market, as a local would do. And so I'm getting crushed, and now we sold down the most we can go in a matter of seconds from the time I bought 10 way higher. and I start counting. So the market closes for 15 minutes for the world to evaluate if the decline was proper.
Wow.
And I start counting in my head how much money I'm down on paper. And of course, you can't get out because we're limit down.
Yeah, yeah.
And it's more money than I have in life.
No. What did you do?
You try not to panic, but every bad thing you can possibly think of goes through your mind, as well as the fact that I had just had my first child who was 3 months old.
Oh,
And I'm
boy.
thinking, this is not good. And while we're limit down, a broker behind me says, who needs to sell some? I go, me. And I get in his face, almost
Yeah.
nose to nose. He goes, buy 17. So now I've locked my loss at limit down, and now I am short 7, but the market's closed, and you can't make money on those 7 because you're already at limit down. So now I'm thinking I'm really screwed. A few minutes later, the market reopens, and there were so many unfilled sell orders from the original limit down. Within 5 seconds, we reached the next limit down,
Oh,
which is even a greater distance of price movement than the first limit. From the prior day's close to what the first limit was, this is even a bigger amount. So now I'm short 7, and we've just collapsed again. And I bought 11 at limit, the second limit down. And in seconds, we start bouncing. And unfortunately, I kicked those out so fast because I didn't know where I stood. I just wanted to be flat.
well, that makes sense.
And when I count, I step out and I'm thinking, I've lost the house. I have to tell my wife, And it ends up, I had my second best day ever.
Oh, wow. It turned on its head.
Because we sold a whole nother limit down and I was short those 7. So even after I locked the loss on the first 10, the other 7 made me more money than I lost on the 10. So in a matter of 20 minutes from buying something that goes limit down in moments, knowing I've lost everything and the house, I ended up having
And
my
possibly the
second.
wife.
So that day, I get home, and my wife said, "Wow, how were things today? I heard it was pretty crazy in the market." And I said, "Yeah, I did okay." That's all I said. And not until 3 years ago did I tell my grown children this story. How I had lost everything in a matter of moments, and then somehow by, you can call it the grace of God or just good luck or the fact that the broker who flipped my position happened, I got in his face and it's just luck, which, and part of the reason I tell the story at conferences is you can have all your tools, you can be great, but sometimes it's just right place, right time, or wrong place, wrong time can determine your life, no matter how smart you are, no matter how good you are, no matter how bad you are. There's a lot of things that happen in life that are totally out of your control. And this was the type thing that all I'm doing is making a market the way a two-sided market, the way a local does. And it was, I used to have a full head of hair.
Yes, I was going to ask
Commodities
you whether this was the moment when
commodities
you
trading.
lost all your hair.
Commodities trading did this. Yeah.
Okay. So how is this? I'm really curious. So for those listeners out there, we are going to go through some really cool charts after this, including Uber as well. But just briefly before we get to the charts, how has that one day changed your style forever?
Well, it certainly makes you humble in the sense that you realize you're just this tiny little thing in the whole world of crap and stuff that goes on. At the time I was one person out of probably 80 to 100 traders in the pit. I mean, you're just this little microcosm of everything going on. And as much as you try to control what you do in life, you realize you're this just tiny little thing in a much bigger scheme of what goes on every day. So I'm always conscious of it. And I think ultimately, that day I've been very thankful for because it scared the crap out of me.
Mm-hmm.
And I also luckily pulled out of it.
Yeah, it
And
turned out to be your second best day ever.
yeah, yeah. But
Great.
the ups and
And this is
downs
all the
in
payout
between,
right here. On that note,
yeah.
you've got some amazing, amazing investing ideas for us. Let's start off with Hawaiian Electric Industries. This really piqued my interest, Rick, because I've not traded this or invested in this before. This is, of course, the biggest electricity provider in Hawaii.
Yeah. So they got crushed in 2023. You can see on the upper left-hand side of the chart, this thing was trading about in the low 30s, and then it just gapped down that summer. Well, that was the Maui fires, and things got, the lawsuits and everything. So this has been, for a few years already, just trying to recoup. And I'm looking at price action recently. It's not a name I typically follow, but a friend of mine was telling me about this. And I look at the chart and I see not only is it building a base and moving back up to, some of those prior highs, but if you look at the cloud model, price action has come above the cloud. The lagging line, which is that bold blue line, which is current price displayed 26 bars behind the current time frame. So in this case, it's a weekly chart, so it's taking the current price where we're trading and displaying it 26 weeks back. And it's part of the model. That is also above its cloud. So this has finally turned into bullish mode over the last few weeks. We've crossed above the midpoint of the channel that I drew. So the channel I took from the middle of 2024, the lowest low, to the next important low. And by the way, here's something too I can just tell your listeners. The proper way to draw a channel is once, in this case, an up channel, you've picked the two lows that you're using as your base trend line, your uptrend line. And then the proper way to draw a channel is to find the highest high in between those two low points, and that's where you connect your parallel line to. A lot of people kind of do it just by, this looks right, this feels. There is a proper way to do it. So if you draw an uptrend line between 2 points and you extend your line, look in between those 2 points for the highest high. That's where you would touch your software to draw the parallel line against the uptrend line. So in this case, we see going forward later this year, that top of the channel is $20, $21, something like that as we go late into the year. And then there's a DeMark propulsion target off of the January low from 2025 that comes in at 1873. So that, let's call it 18 and a half to 21-ish. That's kind of where my initial target would be for this move over time. So where do you buy it? Well, you could always buy it a little bit now because we do have a little bit of near-term breakouts. So, one of the things I always had the hardest thing doing in all my years was buying strength. And even in the pit, I could sell strength. I had no problem hitting bids on a market that was going down. But personally, for whatever reason, some mishigas in my head, some just talk in my head, always made it hard for me to keep lifting offers on a market moving up. I always had the concept, I want to buy a pullback, I want to buy a pullback.
Even if you have high conviction, Rick, you have difficulties buying on a strong move up?
So what I've learned, at least for myself and what I've taught people over the years, is when you have a market, let's say, what would you do with gold or silver now? All the news might be it's bullish.
Yeah,
But
wait for a dip.
right, you naturally wait for a pullback on something ripping higher. Well,
Yeah.
what happens if gold doubles in price in the next few years and you always waited for a pullback that didn't come? So,
Mm.
what I have learned to do for myself and what I've taught people to do is if you have something like this, which is breaking out, and you go, well, I want to buy a pullback, but it may not come,
Mm.
is buy 25 to 33% of your position now,
Mm-hmm.
and then use the bulk of it for a pullback. Do your analysis, figure out where you want to be a buyer, but at least get some exposure to start things off, just in case all your
Mm-hmm.
analysis was right. It should, something's going to
Mm.
break out and it's going to keep going. So that's what I do.
I like that. I like that. Also, it's the same with like another method that I use is the dollar averaging, right? So if you have high conviction, but you know that you want to, let's say, put in 10% every week, right? Even if you don't find that pullback, you put in that 10%.
You can certainly do that over time. You're just going to get an average price. Sometimes in some of my, let's say, retirement account contributions, I figure out, do I want to put this in at the start of the year and just put the chunk in? Do I
Mm-hmm.
think it's going to be a pure up, and sometimes what I do is I pace it, every 2 weeks, a little goes in. Now you're going to get the average over time, but on a year that gets a double digit increase in price, you're not going to come close to that because you're lucky if you get half, and it depends upon when the market makes its moves. In this case here, something like Hawaiian Electric, we're in a
Mm-hmm.
bar six, a setup six. Notice in 2024, underneath the price, you'll see some blue nines. Those
Mm-hmm.
nines are from Tom DeMark's model called sequential. And it's a piece of the model, but often markets turn on nines, ultimately 13s, but nines also. And in this case, you have a double bottom spread out over multiple months that slightly got exceeded last January and then turned around quickly. So that gives me more confidence that those nines were good bottoms, and they're certain good trading bottoms. We're on a six towards a nine now, meaning that how do you get to those nines? In the case of, let's say now you're on a six heading up, those numbers represent each bar, and this is a weekly chart, so each Friday close that's above the Friday close from 4 prior Fridays. So each one is counting, looking back essentially 4 weeks ago and comparing the close versus the close 4 bars back. When you do 9 consecutive bars, either upward or 9 consecutive Friday closes, or if it's a daily chart, daily closes, or if it's a 1 minute chart, 1 minute closes, that the close is less than the close from 4 bars back, then you would do a nine down. We're in the process of potentially doing a nine up. So we could get a pause in another 3 weeks with continued price movement higher. Um, but where would I want to buy the bulk of this if I could right now? Inside that orange box. And that's
Mm-hmm.
somewhere, I don't know, let's call it 13 and a half to $13, something like that. I've got two cloud model elements there, the conversion line, which is the fastest piece of the cloud calculations. That's the midpoint over the last 9 bars. I've
Mm-hmm.
got, it's hard to see, but there's an orange colored line in there too, which is the midpoint of the last 26 bars, and they almost are the same price. And I have a totally unrelated model from Tom DeMark that says, based on the current high of this week, a pullback to 1330 is a place that you might very well find support. So almost have 3 different numbers, totally different calculations that all come up with the same kind of low 13s level.
Mm-hmm.
So that's where I'd like to buy kind of on a pullback here and then play for, the green rectangle box to the top of the channel over time. And potentially, if this really is a big or rounding bottom, you can get up into the low 30s, those brown horizontal lines. That's where it broke down from.
I'm going to be curious, Kat, here because how much do you rely on Confluence? So analysts here talk about Confluence a lot and not just relying on one indicator. I noticed you mentioned you had 3 different ones that kind of aligned. So, what happens if you have 2 out of 3 or just one indicator that is giving you that signal? Would you still make the trade?
Generally with less conviction. I do like to see the confluence of unrelated technical indicators come together. If somebody says, hey, MACD is on a buy and so is RSI, to me, they're similar indicators. They're not calculated the same way, but they're very similar in what they're trying to give you in the sense of overbought, oversold. Here, I've got unrelated type models that say the same thing. So I like to use unrelated models and look for a confluence of signals. I'm
I like
thrilled
that.
this
It's like
morning.
having three friends that don't know each other at all and not from the same friendship group.
Correct. This morning I saw that last night Meta reported stocks trading over 700. I recently, I guess it was November, I got long more. I've been long for years, but I bought more Meta at I think it was 586. It's virtually the low tick. I mean, I think I got within a buck or two of the low. And I had an open order to buy it there because I had the confluence of a couple of the indicators there and then a DeMark timing signal, which you can't anticipate necessarily in advance, comes and says, do the same thing. So I've now got a $125 profit on something I just bought on the November low. That's the type of thing where when I have confidence of unrelated models all show up in the same place, that's where I put
Nice.
my bets on.
Sweet, sweet, sweet. We like high conviction signals there. Let's take a look at Mosaic Company, one of the world's biggest fertilizer producers in the world. Give us a quick run through. I've not, this is another one that is really foreign to me. I know about phosphate and potash, having been in Jordan and places that produce that kind of stuff. But what's the signal behind this company?
So look, this has been a long-term underperformer. What I like about it now is you've got a commodity kind of the beginnings of a commodity boom and generally an underinvested sector of the market. This has a double bottom. We were talking about 13s and 9s as signals, right? So I've got a combo late December and virtually the same price almost a year later, a horizontal 9 count. Again, they counted differently, and actually I didn't circle it, but you'll see just about on the peak was also a 9 count. So this went from 13 bottom to 9 up, which is often what markets do, into a 9 bottom that held the lows or anything near the lows, which is the lower of the two orange boxes. So that's my support level that held, and we're starting to move up. Same type thing here. You could buy a little now. My preferred buy area is something like 26.5 to 25.5. And that's now where I think bulls are going to want to see that pink line, the conversion line, again from the cloud chart. That's the midpoint of the last 9 weeks. So it's the pure arithmetic midpoint. It finds the lowest low, the highest high, and it's halfway in between those. That should hold on pullbacks if this bottom is good.
My issue with yeah, well, my issue with this is not so much the chart, but it's more so the fundamentals because we've got data showing near-term weakness in fertilizer demand. I mean, what are the kickers here?
So I don't do a lot of work on the fundamental side. I've been able to make a very profitable career reading charts and understanding price movement, kind of, in my own terms. So I couldn't tell you anything about Mosaic specifically. I know they're in potash, fertilizers, etc. And when I see a long-term double bottom and a commodity cycle that's turning more favorable, look, on the upside, I'm not sure. I could try to look here and kind of, so I'm looking on a chart that, all right, let's see. This thing got to about $78 in 2022, right? It's got a long ways to the upside to go if it wanted to, right? So we're not near highs. But when I have a long-term double bottom, so, it's a year that took to get this. The high reached the high from late 2023. That's the horizontal brown line at 38.30. All right, so right now we have a trading range where it's somewhat in the midpoint, so I don't want to be a big buyer here, but I want to start a position and buy on a pullback, assuming that that double bottom is a good low.
And really quickly, because we've got two more charts to get through, the Japanese Yen Trust ETF.
Yeah. So, of course, IG traders are more familiar with trading directly into foreign exchange markets. I'm doing this simply for people who don't have access to that and are willing to trade an ETF. I got my clients long the Japanese yen. My institutional clients 2 weeks ago, we bought probably an out of the money call that was I forget how many cents higher, but it doubled in the first week that we bought it, and then on the high this week it was 4 times the price we paid. So we've already hit a near-term target. That orange line is part of the cloud model, pulled back. So now, if we're stuck if we've got a good bottom, and I think we do, if you look at the way this lines up, you've got a triple bottom, if not a quadruple bottom. Buy a pullback to the pink line, that conversion line, the midpoint of the last 9 bars. Now that's going to move every day, or potentially can, if you make a higher, lower, low over the last 9 days, that value is going to change. But I would be a buyer here based on this, somewhere near 59.10, and I would probably target 62 and a quarter, 62 and a half or so. So I think, the street's been very, very bearish yen. I understand why. It's something I track closely. But at its lows, the poll I follow got down to only 14, I think it was 14% bulls in Japanese yen. Anytime you're 15% or less, you're certainly deeply oversold. That's not good enough to go buy something. But when I look at this pattern and I saw what I did on the actual Japanese yen chart, I told my clients, let's buy an out of the money call here. It's a cheap way to get exposure on the upside. So I think it's working.
And I noticed you circled the MACD as well. Is that a prerequisite that we have to see the cross on the MACD?
No, but it's, to me, these type of oscillators are generally secondary or tertiary type of signals. I would never buy this chart because the MACD turned bullish. I already need a reason to be bullish. If the MACD goes my way, it's just another reason, but it's never going to be the reason.
First reason. Exactly.
It's supporting evidence.
Yeah. And one other key chart that you have been looking at, which I am very keen on because I do have a position on it, is Uber. We have so much interest here because in London, all Uber drivers have been told as of summer last year that there are going to be automated Uber cars rather, by the summer coming. And so we are watching this space very, very closely, especially since we've seen the rollout of autonomous taxis in Austin.
Yeah. I don't know how this is already well off from a peak near 100 or just over 100. What makes me interested here is that the December low was both. You can see they're not circled, but there's a 13 and a 9 count very close to the lows. The 9 count was the actual low. We rally. We did not get above that. There's at 88.65, there's a green dash line, which is a DeMark model. You needed to properly exceed that to say we're going to get another leg higher. So this is testing the lows and could easily take out that December low. But I'm starting to get interested in putting position onto this. And if you look, I've identified a swing area. Go back to the left side of the chart. That's where highs were. We then got above those highs, and then we pulled back to it. And that's very close to where we got to in December. Just beneath there, in the pink box, is the stop out level to the 13 that just showed up. And in the gray box where I have swing line, that dotted red line is the risk level from the 13 that was in December. So down, if we tuck under 78 and run some sell stops under the December low, I think you take a chance to buy this. I don't want to stick around for it to move down to 73, the orange box, because that would be the next target down. So I nibble a little here. I see it just opened up trading. It's up $1.25. And so I'd nibble a little here, and I would probably nibble a little more in the 76-ish handle. And if this got to 73 and a half, 74 and a half, something like that, I'd be gone. It's a pure trade. But the upside here is 88 to 90 to the low 90s from a risk reward point of view. And that's one of the beauty.
Where 2 green boxes are, right?
Exactly. And one of the beauty things of what DeMarc's model do, they help identify turns and exhaustion points to trends. It helps you start looking for reasons to buy something counter trend. And they're almost always by the nature of how these numbers show up, they're always counter trend. And I've been a counter trend. I came across this model in 1996, I think it was. Somebody introduced me to this model. And it so much fit into my natural pattern of trying to be a counter trend trader. I think that's where you make the best money, and it's the only way to outperform. You can't outperform playing the trend.
Yeah. Is this your favorite model of all time? Everyone's got favorites, right?
I'd say that there are 3 models that are my core models. DeMarc models that count to 13, which are sequential and combo. They count differently to 13, but those two. The cloud model, which
Ichimoku,
in the Western...
the same one?
What's that?
The Japanese call it the Ichimoku.
Yeah, Ichimoku. Yeah, Ichimoku. In the Western world, I'm considered the foremost expert in Ichimoku. I pretty much introduced it to the entire institutional community. And then another DeMarc model called propulsion, which helps measure where moves go to. And what's amazing about that model is, let's say, when the market sold off all the way into the lows in October of 2022, it already put targets way, way higher for where the S&P would get to. And I have traded those levels so effectively, the diamonds, the Qs. So months and months, or sometimes years in advance, you can see where predictive moves are going to go to. So right now, like for the S&P, the next leg up, if we finally get above 7,000 in the S&P, in spider terms, SPY, the target is 747. And that's off of April's low from last year. So those are my 3 favorite.
Thank you so much, Rick, for your precious time. Rick's 3 favorite models is the DeMarc, the Ichimoku Cloud, and also the DeMarc Propulsion Indicator. As always, we look forward to having you back, Rick. And one of the key things that our clients have been asking is, what to look out for when there is about to be a correction. We'll definitely get you back on that. Thank you so much, and have a great day, whatever you're doing out there, Rick. Any clues as to what the rest of your day looks like?
Yeah, it's a Thursday, which means I write my weekly report and the daily, so it's a day of writing.
Brilliant. We will see the rest of you online. Any questions for Rick, please put it in the question box below or reach out to me. Rick, as ever, always a pleasure. May you stack the odds in our favor.